We're doing our self-directed IRA weekly webinar. As people are joining on here, I'm going to go over a few slides. We do have two special guests today. They've been working with Quest for a long time, and we'd love to have them on. So before I turn the floor over to them, I'm going to go ahead and just go through a couple quick slides here. If you're new to Quest, definitely pay attention because I'm just going to tell you a little bit about Quest and who we actually are. So we are the largest self-directed IRA custodian in Texas. We have 20,000 clients, and just because we're local to Texas doesn't mean we're just in Texas. We have clients across all 50 states. So no matter where you are, we'll be able to help you out. We do have $2 billion in assets under administration right now. I believe it's 2.1 billion actually currently. We have about 100 employees, and we have 34 certified IRA service professionals here at Quest ready to answer your IRA questions. And then finally, we have $350 million in undirected cash. So that's $350 million that's just sitting in people's IRA accounts, and they're looking for their next deal. So if you're looking to borrow money, definitely keep coming and attending our events. I'm going to talk a little bit later about one of our in-person events we have coming up. So if you are looking to borrow money, definitely would want to attend that. Quick disclaimer here, everything you're going to see in this presentation, it's all for education purposes. So we don't provide any tax, legal, or investment advice. You always want to do your own due diligence before you get into any investments. Now, with that being said, what types of accounts can be actually self-directed? So these are probably accounts you've either heard of or you already have. So Quest, we break them down into three categories: our personal plans, our employer plans, and then what we call our specialty plans. So our personal plans are a traditional IRA and a Roth IRA. Again, these are plans you probably already have. Our employer plans, these are good if you're self-employed or if you run a small business. So we have the SEP IRA, the simple IRA, and the solo 401k. So if you are a business owner, or you run a small business, definitely give us a call. We can talk about which plan might work best for you. And then finally, we have our specialty plans. So these are accounts you can start using today, those being the health savings account and the Coverdell education savings account. So some of the investment choices we see our clients get into mainly is real estate, private entities, and investments into promissory notes. So these are just a few of the investments. Again, really any investment you do outside of an IRA, you can most likely do inside an IRA. So give us a call, talk to us about what you're looking to do. We'll be able to help you out. So as you know, Quest, we offer endless free education, just like the class you're on right now. One of those being is the self-directed IRA Social coming up. This is the in-person event we were talking about. Now, spots are limited to these events. The first one is going to be in Houston on September 7th. There's only 50 spots for each event. So if you do want to register, go on our website and register. If it maxes out at 50, you can still watch it online. So if you do register, we please ask that you attend because it is limited to only 50 spots. And we have additional classes and webinars as well. We do weekly IRA classes. We also host a Saturday class. We do a virtual networking happy hour. That's the first and third Wednesday of every month. And of course, you can find all of our old classes and pre-recorded classes on our YouTube channel, as well as our Facebook. Now, everyone likes free things, so we are doing a flash sale right now. So now all the way until the end of day tomorrow, if you open an account, it's normally $100, it will be free. So we say it again, from now all the way until the end of day Friday, the accounts are free. So if you are thinking about getting on board, if you're thinking about, maybe setting your friend up, you're setting up your kids an account, whatever it may be, it's free. So take advantage of that while it's here because these flash sales don't really come around too often. And then finally, we are doing rewards for deposits as well. So if you move in, a minimum of $100,000, you will get a $125 account credit, which is really nice. And it goes all the way up to $500. So that could cover your fees for really the entire year if you do move in some funds at Quest. So how can you get in touch with us? You can scan that QR code and set up a time to talk with any of the IRA specialists here at Quest. We also have a live chat feature here on our website where you can chat with an IRA specialist, and give us a call as well, 855-FUN-IRAs. And then finally, you can also email us. I put my email on there, as well as Nicole. Nicole Bako is also one of our IRA specialists who's going to be in the chat box answering your questions and moderating. So if you do have questions, feel free to put those in the chat box. Now, I'm going to turn this over to Jacob and Arleen Garza. Now, they run Reap Equity. And like I said, they have been with Quest for a very long time. You know, we've been how many Quest clients work with you, do you think?
Oh, upwards of 150.
Yeah, 150. So they're very familiar with Quest. They're familiar with our process, and we'd love to have them on. So guys, go ahead, share your screen, get into the presentation, and please put your questions in the chat box, guys, because we will do a Q&A session at the end. So go ahead, guys.
All right.
Thank you for having us, Evan.
Absolutely. Thank you.
And welcome, Yeah, thanks, Evan. Appreciate it. And welcome, everyone. Jacob Garza here with my wife, Arleen Garza.
Hello, everyone.
And Arleen, you want to go ahead and just start telling them about multifamily? And, well, how about a little bit about ourselves real quick?
Sure.
You want to get into some of that?
Great. Okay, so we're going to tell you a little bit more about us on the following slides. We are vertically integrated, which just means that we control the process of owning a property start to finish because we have our own management company. So our company manages the properties that we buy on behalf of us and our investors. We are also going to talk about why we believe so highly in multifamily and provide for you some thoughts on what to look for if you're interested in investing your self-directed IRA or solo 401k EQRP funds into an investment opportunity through your IRA. What does that mean? What is the IRA holder's role versus us as the sponsors and managers of the property's role? What is the typical time frame to invest your self-directed IRA into a deal? How long does it take? What are the key items to know about the multifamily market today? And then how do you join the REIT network so that you are kept apprised of any opportunities that we have available in the market?
Right. Thanks, Arleen. So a little bit about us. Prior to multifamily, I was an entrepreneur since I was 26 years old. I started my first software company at 26 and two more after that. We live in San Antonio now, and we do this full time. When I had my software company, I sold my last one in 2007, and that would have been in Dallas. And I sold it. I was a sole shareholder, had over 100 employees. If you want to Google Tenant Pro, it's like tenant, like a resident tenant pro, and Jacob Garza, you'll see quite a bit of stuff still out there. But yeah, in 07, I sold it and we moved to San Antonio. Before we talk about our multifamily journey and how we invest people's money and help it grow, Arleen, why don't you tell them about yourself?
Sure. I have a degree in finance, so I'm a numbers person. And as such, I began my career and spent 20 years working in the banking industry. The last company that I worked for was Bank of America, which is a very well-recognized banking giant in the industry. And I held different roles from managing banking centers to leading a marketing team nationwide. In fact, I launched their first ever Hispanic marketing program and took it nationwide. In addition, I have a background in lending and HR over the 20 years that I worked. And so what I found is that I've been able to use all of that background and experience in running our properties. So it's been great. In addition, Jacob and I take education seriously. We're glad all of you are on this call learning more about IRAs. When we started in multifamily, we decided to become certified through the National Apartment Association as certified apartment managers and certified apartment portfolio supervisors so that we could understand all the ins and outs of what it takes to run a property successfully.
Okay, so fast forward 2007, I had an exit of my last software company. We moved to San Antonio in 2008. we really watched the market go through all kinds of troubles. And in 2012, Arleen and I bought our very first apartment complex. And I'm somewhat of a, I don't know, no one call me somewhat of a nerd. I like to learn things before I just start buying stuff. So the 24 unit we bought by ourselves, and I did all the maintenance on it, and Arleen did all the leasing. And I just wanted to figure out, how properties actually operated. How do you drive income? How do you control expenses? What's the talent like? And we didn't take us 3 or 4 months to realize, hey, if you take care of your residents, they're going to pay all the bills. They're going to pay the mortgage. They're going to give you money left over. And it's a tangible asset. You can see it. You can touch it. It's got great tax benefits. So that kind of led us to buy 2 more apartment complexes, a 28 and an 88. And then from there, we just took off. And today, we have almost 3,000 rental units. We have our own management company, and we're in Houston, 5 properties in Houston and 8 in San Antonio. So we'll talk a lot more about our company moving forward. So you want to take this one, Arleen?
No, go ahead.
Okay. So as you can see here in the middle, I'm going to direct your attention to the middle part. When it says 6 assets taken full cycle, that means we have bought a property and either sold it or we have refinanced it or taken out a supplemental loan.
Actually, Jacob, that is 6 assets that we've sold.
6 assets that we've sold.
Yes.
Okay, we've sold 6 assets. I didn't realize that time flies when you're having fun. So I think that's important because you want to get with syndicators or people like us who put deals together and invest other people's money with our own money we put in there. Because taking something full cycle really gives you a good full insight on what it takes to have vision on a property, fix that property up, make it nice and pretty, get good renters in there, finish your business plan, and sell it so you can get a gain on it. And we've done that 6 times. And you can see the bottom ridge at South Cross. We still own that property. Our investors purchased that in 2016. They put $100,000. I'll just use that for a round number. To date, they have over $80,000 of their own money back. They still own the property, and they still own the same percentage. And the money we've taken out on the supplemental loan was tax-free. So you can see we increased the value over $4.5 million. Take a look at Knollcrest and Horizon. That is a property that we purchased in 2018, right? We purchased it on a bridge loan. December, we increased the properties over $12 million.
Sometimes you'll hear the term forced appreciation, and what that is increasing the value of a property through a rehab plan or an improvement plan. So in the case of Knollcrest and Horizon, as Jacob said, we increased the value of those 2 properties by over $12 million in a short period of time of a little over 2.5 years. So our investors were really pleased with that, and we've been very excited about those 2 assets also, which we still own.
So just real quick at the top, big numbers there. We have 12 properties in our current portfolio, 3,000 units. When we buy these properties, we fix them up. We're not slumlords. We run them right. And we put $11.5 million of improvements in these properties. To date, we've raised $70 million of other people's money. And we're very cognizant that's your hard-earned money, and we're stewards of that. So that's something that we've raised. And the assets, the portfolios we currently have are worth $280 million. Okay, Arleen?
Yeah, I think you missed one.
Oh, okay. So just this quick snapshot of our company. I think it's important you guys know that although we started like a mom and pop, we don't run one like this. If you see on the left side, that's the REAP equity, that's the buy side. So we have a full team of people who talk to brokers, analyze deals, making sure we buy right. We have an investor relations manager who manages all of your investments, so you know where the investor narratives are. We have a portal, you know where your K1s are, you know where your distributions are. And on the other side, we have the REIT management. As I mentioned, we don't hand off our properties to third parties. We manage it ourselves. And that's just a huge advantage when it comes to operating the property and making sure it's profitable.
So we did mention in the beginning that we want to talk about why we invest our money in multifamily and why others invest along with us in multifamily. And so I want to talk a little bit, I won't hit all of them, but the pros of multifamily investments. One of the big ones is it's a tangible asset. What that means is you can go by and visit it. It's not a paper stock. It's not something that someone else is valuing. It is strictly valued on the income it generates. Very tangible. There's steadily increasing demand for apartments. For example, the markets that we buy in, San Antonio, 51% of the households rent. And in Houston, our second market, 58% of the households rent. So again, there will always be demand for apartments. For investors and for us, we like the passive income. So we issue quarterly distributions, and so that money gets sent directly to the mailbox or directly to your bank account. Capital preservation. Again, it's an asset that's tangible. It's an asset that's in demand. So from a capital preservation standpoint, it's really excellent. It's a good hedge against inflation. It's stable and resilient. We found out through COVID, and as did others, that this is an asset class that held up very well. People will protect two things. One, they'll make sure that they and their family have food to eat. And two, they'll make sure that they have a roof over their head. So we did not see a big impact from COVID because it is a very stable asset class. You can increase the investment value through natural and forced appreciation. I talked a little bit about that. It's a lower tax burden in some cases through depreciation losses. Now, IRA dollars are a little different, but it's still a very good opportunity when you look at the returns that are available. Self-directed IRA investments are accepted. This is a investment that's scalable. You can, instead of investing in one single family house with, $100,000, you can invest in a 300-unit apartment complex alongside us in a syndication, or what is more commonly known as a group purchase. So there are some comparisons to other types of investments, stocks, bonds, crypto, all types of other currencies that are out in the market. But there is a difference, again, primarily being a tangible asset. There's less market volatility. As you will see, stocks and bonds and crypto, there is significant market volatility, uncertainty, and risk. Capital gains taxes and fees when sold. Limited choices of IRA investment is allowed as part of stock, an IRA investment. Single family, well, you're going to try to buy a single family home yourself. It's going to take a lot of your time and resources. There's a shortage of assets as housing prices are going through the roof. And the asset carries some personal liability. You can't borrow non-recourse on single family very often, if at all. And you can't perform a cost segregation study, which results in depreciation benefits for single family. Retail, industrial, and other commercial real estate assets, typically those have a higher minimum investment. What we typically see in the multifamily world is minimum investments as low as $50,000. There's a limited ability to force appreciation in those other commercial real estate asset classes. And there's limitations on returns or preferences. And in a lot of cases, these are only offered in 506C or real estate investment trust classification. So a very different investment altogether. So continuing with the theme of why multifamily, again, we talked about the population pool is growing. Home ownership has risen, but some people have been priced out of buying their own home because of the high home prices we're seeing. And with lumber and other building costs so high, the prices of new homes are just going up. People are also delaying buying a house. Some people don't want that responsibility. In addition, millennials, Gen Z, and baby boomers are renting at much, much higher rates. So we look at all of those data factors when we look at markets to buy in. So again, multifamily is a great way to earn passive income. As a limited partner, you can enjoy that. There's great tax benefits, and it's a great way to diversify your portfolio. And the valuation of the multifamily assets are predictable. Again, strictly based on the income the property generates, not location, not comps, strictly what that property generates.
That's right. Arleen brings a good point. And also, we don't buy properties that are super brand new, and we don't buy properties that are super, super old. We kind of buy them and then built in the 90s and 2000s. And I think that specific class is always going to be a renter. If the economy does very well, you're going to see some people move up. If the economy starts to hiccup a little bit, you're going to start to see your renter class move down. So which with the A's suffer, the brand new ones suffer, and the bad ones suffer. So we kind of stay in that sweet spot, and it's just worked extremely well for us. Like I said, we've been doing this for 9 years.
Right. And what should you look for if you're considering finding a multifamily investment deal to invest your IRA funds into? Well, it starts with the syndicator. People like Jacob and I, the buck stops with us, as we say, and you should be looking for a syndicator that is experienced, that's got a track record, and don't be afraid to ask them for that information. We're asked all the time, and we don't mind providing that. How have our properties performed? What types of distributions have we been able to achieve? Returns, etc.
So they should provide you a list of their properties, when they purchased them, when they sold them, how much they paid for it, what was their investor return, how much money they put into it. So it should be a nice resume.
And the other thing to look at is to ask them what is their experience at managing assets, not from a property management standpoint, but from an asset management standpoint, meaning managing the manager. How much knowledge do they have of that? In addition, when they're presenting an opportunity or anyone's presenting an opportunity, make sure that they've provided enough information to you on the market and the submarket, meaning Houston would be the market, but a submarket might be the Woodlands, as an example. And for us, we feel like being vertically integrated is a plus in all those respects, because we have a lot of market data and knowledge just from managing properties in those markets. The syndicator or the general partner should have the financial ability and creditworthiness to qualify for a loan. What does that mean? Typically, the lender is going to want to see net worth of the syndicator and GPs at a certain level and creditworthiness to be strong. The asset should be in a market that is landlord friendly, with good job and population growth and the possibility for rent and other income growth. For example, we look for stabilized assets that are already performing well, but that have value add opportunities where we can come in and improve the look of the property or improve the look of the units to drive higher rent. Also, we look for management plays. You may have a very nice looking asset, but it hasn't been run very well. We know exactly from our management company what to look for and how to improve that property strictly from managing it better.
I think the other thing that we look at, or we want you to know, is you're going to come in as a limited partner, so there's just no liability on your part on all these investments. The general partner takes the liability on, if you would, and some carve out recourse on the note. So you're completely insulated, if you would, from any liability on these properties.
And just to clarify a little more, the loans we get on our assets are non-recourse, other than some what they call bad boy carve-outs, which we would never anticipate anyone ever doing. But there isn't recourse to you as an LP or us as a GP. When investing in our IRA, consider what is your role, and then what is the sponsor or the person that's presenting the investment opportunity for a multifamily to you. So from the sponsor standpoint, we like to have a relationship with our investors. We like to know about them. We like to know about their goals. We will present opportunities to individuals that are in our investor database. And at the end of the presentation, we'll show you how to get on our database. We are responsible for managing the asset. All the performance is strictly from us. We provide investor communication. So financial reporting on a monthly basis on every property. We provide quarterly distributions, for the most part, quarterly. A few of our assets are monthly. We provide at the end of the year a K1 statement, which basically shows the results of your investment on that property. And we also provide reporting on your behalf to Quest in this example. So we'll send them some valuation data on your behalf at the end of the year that you don't have to worry about providing. Now, as an IRA holder, what is your responsibility? Well, first of all, set up your IRA account. Quest, at the beginning, Evan told us about a great deal that Quest is offering now where you can open your account basically free. So you establish the IRA account, you establish a relationship, and you vet the sponsors, check them out, and the opportunities. You complete the paperwork for the investment with the IRA custodian, and then the IRA custodian works with us to make sure that we have everything we need to get the investment established. And then the IRA custodian will make sure that your funds get transferred into the investment. And then you get to enjoy the mailbox money. It's sent directly to the IRA custodian. So I will just add really quickly that for us, when we have an opportunity, we have a new one right now, usually within 3 to 5 days, our subscription is give us a soft commitment. So you will want to make sure to work and set up your IRA in enough time to be able to fund the investment within the time frame that the sponsor is looking for.
Okay, I'll take this one. When to invest in your self-directed IRA? Some of this might be a little technical if you're not familiar with that, so we do encourage you to set up a call with us. At the end, we can provide a little more education on this, but basically, cap rates have compressed. Well, that means apartment prices have gone up. However, that's mitigated with a very low interest rate environment. And occupancy rates and rental rates have grown. They've actually increased. People realize that apartments, even for some people who can afford a home, they rent because renting makes a lot of sense. Very difficult to get a home these days for down payment and credit, so renting makes sense. So there are many variables between the markets and submarkets, so you should look through that. Some new deliveries are being delayed. Right now there's a shortage on materials, so a lot of apartments just aren't being finished on time. There is a CDC moratorium on rent, so I can tell you this, and Arleen can experience this, people are paying their rent and they're putting food on their table. So it's had minimal impact on all of our properties. So, but we are continue to be very bullish on this participation of apartment investing, and we just encourage you to reach out to us and give us a call. So here it is. You can reach out to us, invest@reapequity.com, or you can scan the Q code or reach out to us directly on the emails that you see there, and we'd be more than happy to chat with you guys regarding apartment investing and just see if it's right for you or not. All right, I think we're done.
Evan?
Hey guys, can you hear me? Perfect. That was a really good presentation. You know, you really went through a lot there, which is really nice. I like how you tied in self-directed IRAs, you know, what we do here at Quest. So we got some questions here in the Q&A, and I will go through some of them. So first question is, on average, what do you sort of see as a rate of return on some of your investments?
What's the question, Evan?
On average, do you have an average rate of return for some of your investments?
Yeah, the average rate of return on our current deals is about 9 to 10% cash on cash each year. And
they range as high as about 14% on some of our other deals. So between 9 and 14% is the cash on cash portion of it. as we showed you earlier on the assets we've taken, it's been a 245% total return on those assets. So we work really hard to try to keep the assets performing as well as we can.
Awesome. Another question here. Is there a minimum to invest with you guys?
There is. It depends on the deal. It can range as low as 50,000, or as high as minimum 75,000. So it all depends on the deal that we have. We do 6 or 7 opportunities a year that we have coming across that we actually offer on. So it just depends. So yeah.
Okay. In terms of areas you sort of focus in on, is there a certain asset class or certain area in which you focus in on, doing the investment around?
Yeah, so right now we're in Houston and San Antonio, and our focus is high 80s to the mid 2000s. That's what we like to focus on. These are very friendly to landlords, if you would. The states of Texas and even our jurisdictions in both Houston and San Antonio. But as far as us, we look for properties that are in great neighborhoods. We stay away from properties that are hidden. We've known from experience that these are properties you have to put a ton of marketing dollars in. So we like to be near schools, for example, and busy roads. Right, Arleen?
Yes, and the other thing I want to share is that before we even underwrite an opportunity, we pull a crime map. Why? Because we know that people want to live in safe areas, and since we have our own management team, they're going to be at those properties also. So we want to make sure that they're in good areas and that they're comfortable walking onto that property every day. We just find you get a little better renter profile when you're in areas with lower crime.
Mm-hmm. Yeah, absolutely. So another question came in here. What is the hold time for these investments?
Okay, great question. We typically underwrite a 3 to 5 year hold period. And we have seen that in even the assets that we've held longer, as we showed you on the case studies, we have a capital event. We'll do a refinance or a cash out supplemental. But whatever step we take, we go back to our investors and we ask them, here are your returns if we sell. Here are your returns if we refinance and hold. And we get them to give us their feedback on what they would like to do. And then we take the majority opinion and we go with that recommendation.
So actually, I have one, Evan, popped up on a screen here, if I may add. Do you have to be an accredited investor to invest with you? And the answer is no. You do not have to be accredited. However, if you're a sophisticated investor, you do have to have a substantive relationship with us. So that means let's schedule a call. It's the first thing to get in our database. And the second one is you have to understand the risk involved in making an investment decision. So you would have to have some kind of knowledge of multifamily to understand the risks that are involved. But those two criteria, you could jump in on our next investment. In fact, I have another question. You mentioned a new investment opportunity you currently have. What is the rate of return for this offer, and what is the minimum investment? Well, I prefer not to talk about our current investment opportunities because we're not really allowed to solicit that. So if you could just reach out to us, we'll just pretend like we don't have one, and you could certainly be on the next one.
Yes, but we're happy to share that information with you. But we'd rather start a relationship first and get to know you a little better.
Yeah, guys, why don't you put your contact info in the chat box here?
Okay.
If you can, put your email and your phone number.
Absolutely.
If people do want to reach out, they have a way to. Another additional part to that other question I asked earlier, in terms of like all the numbers, rate of returns, equity multiples, those type of things. Will you provide those for each of your both open and closed deals so people can sort of review them? Is that information you provide to them?
Say that again, Evan.
So like in terms of all the numbers, right? The financials, equity multiples, those type of things. Do you provide those numbers for old deals as well as your upcoming deals to people who might be interested?
Yes, we do. Good question. We have a performance resume where we basically walk through every deal we've ever owned or every deal we currently own, and we share with you what we bought it at, what the value is today, what have the returns been to date, and then if they sold, what were those returns by each individual asset. So very transparent, and welcome anybody that's interested to get with us, and we're happy to share any and all of that information.
Okay, awesome. Now, one final question here. We're going to answer from the both of you. Can you give us one piece of like a golden nugget of advice, one piece of advice for people listening today?
I think my advice is to take action now. I mean, I'm a conservative banker by nature. And so when we first got into this industry, I didn't completely believe it all until I saw it firsthand. And so I will say that really vet, ask a lot of questions of any investment opportunity you have and of the sponsors. But don't sit on the sidelines. Now's an opportunity to really grow your wealth. And we haven't found a better way to do that other than multifamily. Jacob?
Absolutely. My advice, after you take this massive action or decisive step into doing something with your IRA money, the people you talk to, make sure they have a track record. I mean, you guys are with Quest. That's where your money is. They know what they're doing. They have a proven track record. You have thousands of people vouch for them. Talk to syndicators like us, and there are others that are out there. They're very good. Talk to their investors. They should hand over a handful of people that would want to talk, investors. And when things get a little shaky, and maybe they do, I mean, the kimono needs to open up, and that syndicator needs to communicate with you as much as you feel like it. They should also be able to meet with you. So that'd be my advice if you're going to do any kind of investing at all, is make sure they have a proven track record and they're open, or their team is open to talking with you.
And I think the final bit of advice for IRA folks is set up your self-directed IRA. Honestly, if you're considering this, set it up now so you're ready to go. And I will 100% vouch for Quest. We have had no issues. Our investors have had no issues. And you're talking 150 people plus using Quest. So if you're looking for somebody to start with, this is a great company. And we know everybody there and are just very, very comfortable with Quest as our partner from a self-directed IRA standpoint.
Thank you guys. Yeah, that's awesome to hear. Yeah, we do, we love you guys and what you do. So guys, if you are interested in learning more about some of their deals, maybe you want to reach out to them, definitely, we put Jacob's contact info here in the chat box. So check out their website or send them an email. Guys, thank you as always for coming on. We definitely have to have you on more often.
Always.
Thank you very much.
Thank you.
Alrighty.
We appreciate you.
All right. Bye, everyone. Thank you.
Bye-bye.